Welcome to ForexTV.com. Today is Monday, April 21st. I'm Remy Hookie for your New York Forex Market Buzz. In afternoon trade as of 1:30 p.m. Eastern Time, Euro dollar is at 1.5887. Sterling dollar is trading at 1.9783, while dollar yen is around 103.30. U.S. equities started the session in negative territory, with the Dow Industrials currently still seeing red. In the latest earnings report, Bank of America, the number 2 U.S. bank, reported a fall in Q1 profit due to write-downs as well as rising credit losses. Net income fell to $1.21 billion. Meanwhile, NYMEX crude oil prices continue to skyrocket, earlier topping $117 a barrel. Prices have pulled back in afternoon trade. This afternoon, I'm joined by Joseph Francomano from Erste Bank here in New York. Good afternoon, Joe.
Good afternoon, Remy.
Thanks for joining us on this Monday afternoon.
Thanks for hosting.
Well, as we kick off the week, focus will remain on earnings reports for Q1, and today's BOA results have been weighing on equities as well as the U.S. dollar. On Friday, we saw the U.S. currency strengthen and equities rally, but today, euro dollar has fallen from 159 again and fails to breach 160. But first, given that we're hearing diverging comments from the ECB and IMF, and given that we do have the FOMC meeting and rate announcement next week, Joe, what's your outlook for euro dollar?
Well, presently, like you said, Remy, we had a pullback, a pretty steep pullback at the end of last week after failing to breach the 160 level. Euro fell all the way back down to the low 157s. However, before this morning's New York opening, we saw the euro rally hard back towards 159.5 or so. Primarily, I think, on the BOA report. Also, do some comments from some ECB officials, including Weber, who's very, very hawkish about interest rates going forward, who, as opposed to talking about not cutting rates, was actually talking about further hiking rates because of the rising inflation level in Europe. That has led the market to bring the euro right back into striking distance of that 160 level, where there is rumored to be a tremendous amount of option protection as well as stop loss buying necessary on a breach of the 160 level. So with that out there, it's serving as a bit of a magnet for the euro dollar trade right now, and I don't think that's going to be going away anytime soon. As a matter of fact, given more hawkish news for the euro, I don't think that the euro is going to stop or is going to be able to be topped before we breach that 160 level.
Well, Joe, now that we've covered euro dollar, let's move on to the UK pound, which has weakened across the board. Earlier, the Bank of England announced it would swap government bonds for mortgage-backed securities worth £50 billion to ease the credit squeeze. But also, UK right-move housing prices further supported the downturn for their housing market. And we saw the pound plummet against the yen from around 208 to lows near 204.25. So more downside is forecast for the UK currency. But in the near term, what levels are you eyeing for the UK currency against the dollar?
Well, actually, in particular, I'm really looking at the pound against the euro right now. That's more seems to the market's focus, just because of the dollar has its own problems, that are not necessarily related to the pound. So, to be honest with you, I would focus more on the fact that I think the euro sterling level is headed back, is headed higher. We've seen that this afternoon. As far as the pound itself is concerned, earlier last week, we saw the pound trade down to 196 or so. We saw a little bit of a rally on Friday because of the expectations of the cut or the hedging or the money liquidity being pumped into the system. But on the flip side, at this point, the market is kind of looking a little bit bearishly at the pound and at the interest rate game in the UK. At the outside, I would venture to say that the pound headed back to 196 is definitely not out of the question. Perhaps even a little bit lower But again, there's a three-headed monster out here right now with the euro, the pound, and the dollar. Obviously, I think there's greater chances of euro strength against both the dollar and the British pound. And if you do see the euro rally against the dollar, I think you'll get a sympathetic bid in sterling. However, again, and I think that's more the market's attention, not necessarily the level of the pound against the U.S. dollar, but really about the pound against the EU currency. On the outside, like I said, 196. I think the parameters on the range are really set in place. I think the high that we saw the other day above 2.0005. I think that's toppish, and I think the bottom at 196 is toppish, and that's should be supportive, and that's a 4 big figure range in the currency, and I think that's sufficient for now.
Okay, Joe, thanks for mentioning euro sterling, which seems to have continued to reach record highs more often than not in the past few sessions.
That's true, yeah.
And shifting our focus over to the Aussie dollar, we did get Q1 Australian PPI overnight, which came in stronger than expected,
right.
And that was a surprise. And as a result, we saw Aussie dollar strengthen against the U.S. currency to the 940.40 level. And Aussie gains have been strong against the yen as well as the Kiwi. But what is your forecast going forward for the Aussie currency?
Well, it's interesting about the Aussie is that I think it's fundamentally it's following the same exact path as the ECB. You have a relatively sound economy, at least so it seems, and obviously inflation is the chief concern. When the inflation data came out overnight in Australia, that of course served as a propeller for the Aussie to trade higher against the dollar. Previously, when the Aussie rallied up to these levels around 94 and a half or so, it was propelled by the demand of gold. We got gold back at 915 or so after reaching a high a couple months ago above $1,000. If gold catches another bid right now, and I suspect that commodity currencies are going to be starting to trade a little bit higher, then I do believe that the Aussie is paused to make a new record high against the dollar. I would not, I think the immediate target right now in the Aussie dollar is the 95 level. Beyond 95, you're looking at uncharted territory, but technically speaking, it's not out of the question to get a level, perhaps above, maybe 96 and a half, depending on how far we want to go here. But, again, all things being equal, I would not rule out a nice hard run in the Aussie through the 95 level, perhaps as high as 96 and a half or 97 immediately. Again, it's all a question of how these global economies are going to suffer with the U.S. slowdown and how well insulated they are from the slowdown. It seems right now that, because of the Aussie with their higher interest rates and with their inflation outlook, and also being supported by the commodity currency lift with gold, it might be insulated just enough from the U.S. economy to have further gains. I do believe that it is an inevitability that the Aussie will make a new high this year. I think in the short term, it may be by the end of the month. Maybe, it might happen with the Fed next week and so on. But whatever the reason, whatever the excuse, it will go higher.
Okay, and last but not least, speaking of commodity currencies, let's take a look at the CAD. Tomorrow morning we get the long-awaited Bank of Canada rate announcement, with expectations calling for at least 25 basis points and as much as 50 to be cut. So, Joe, before we wrap it up for today's interview, if you could give us your outlook for the Canadian currency ahead of the decision.
Well, the problem with the Canadian dollar isn't necessarily about the currency itself or the economy itself. It's just the markets. The market is expecting the Canadian economy to slow down in sympathy with the U.S. economy. Right now, it has Canada has been getting quite a lift from the higher oil prices, but you're not seeing that necessarily reflected in a stronger currency. You're getting actually a neutral effect in it. I mean, we've been trading since The loonie went down to 90 cents back at the end of in November or so last year. We've been in a rather wide range between 103 and about 97 cents, trading in a nice little wave pattern sideways. But again, that's with oil going from basically around $98 at the time up to, as you mentioned earlier, 117. Canada still hasn't strengthened, and that was what was propelling the Canadian currency last year. So I think it's just a matter of time, I do believe, before you get a pullback in the price of oil, and then you're going to get the double whammy of a drag on the Canadian economy because of the U.S. economy. Again, I'm not forecasting a break of this recent range between 97 and 103 in the near term, but I think going forward, and I think in the second half of 08, when the true impact of the slowing growth of the U.S. economy hits the Canadian economy, I do believe that eventually the Canadian dollar will weaken against the U.S. dollar, but probably more, it'll probably be more announced in its weakening against the other more stable currencies, such as the yen and such as the euro currency right now. So, I think anytime that we might be getting back towards that 97, 98 cent level, I think that might be a great opportunity to start, getting short the Canadian currency. And I'd also advise that above 103.5 or so might be a great idea to short the currency and jump on the bandwagon. I would not rule out a move to 108 by the end of the third quarter as being out of the ordinary.
Okay, Joe, thank you very much for your insight and analysis this afternoon.
No problem, Remy. Thank you very much.
Thank you.
Cheers.
This has been your Forex Market Buzz with Joe Francomano from Erste Bank. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.